Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is Trading a Hot Thursday News Cycle. Today, we're going to look at a whole bunch of markets, a plethora of markets. We're going to take a look at a few of the big news items of the day. There really isn't a whole heck of a lot out there, but we're getting ready for NFP. Tomorrow, U.S. non-farm payrolls, NFP Live. I'll be here. I'll be live 10 minutes before the news drops. This is going to be a fascinating release. We're going to promo that towards the end of the stream. We're also going to look at today's ADP labor market report. It does not look good. It does not look good. We've got some things that are developing here in U.S. oil that are interesting. We're going to go ahead and take a look at those inventories numbers that were out today. We're going to go over why they were out today, of course. And then we're going to look at a U.S. 100 orb that was just a miserable loser. This is one of those times when we want to trade orbs. We want to trade breakouts. I'm going to sort of show you the difference between the 30-minute orb and the 15-minute orb. I know most of us like the 15. I like the 15 too, but I'm partial to the 30, especially when we start to see real sluggish price action early in the session, and a lot of that is because of what we've got coming on the news cycle. So we've got a big-time news cycle. We've got a lot going on. We've got a lot to trade. We've got some Forex pairs to look at, Australia dollar, U.S. dollar, Kiwi CAD. We're also going to look at the Euro USD, and we had a real similar trend line develop. Instead of a bullish trend line, this is a bearish trend line, and that type of trade is starting to develop here in one of our other featured pairs for today. So it's good to see everybody back. Hurst Warren's good to see you. Hurst, 44, the Punisher. Good to see you, the Punisher. Right on. It's like a big fullbacks number, 44. Sorry, I'm in full football mode. Montana Grizzlies open this Saturday night, so I got season tickets. We're already getting excited for the big opener, but everybody else pretty much opened last week. But always a lot of fun this time of year, that's for sure and certain. Andrea Gorwal, good to see you. Andrea, welcome. Alan, good to see you. Hi. Let's go ahead and get it. Let's see. Yeah, tomorrow. Yeah, there you go. The Punisher. I love the name. That's what we should start calling these streams, the Punisher streams. I played a little fullback when I was in junior high before we made the transition under center to quarterback. But yeah, that's I get a kick out of that. Tina Jin, good to see you. Tina, welcome. Jay King, hello everybody. All right, you have any questions at all? This is a great stream to ask. We didn't really get the news events that I was looking for today. I was looking for something else out of the Trump administration. Not much other than the big hearings about big pharma in front of there's some sort of congressional committee right now, and Kennedy's in front of it. We're just going to leave that where it's at for right this minute. But we may be talking about those big pharma stocks a little bit later on, probably next week or the week after. What's happening today with the new regulations and the new vaccine policies, it's going to affect things like Pfizer, Moderna. You guys know all the vaccine makers' names. They're all going to be impacted. So we're going to go ahead and probably take a look at that towards the end of the month. I want to see exactly what happens and how the dust clears. So let's see. The ISM services PMI is higher. Yeah, definitely. Tina, the thing about those academic numbers is, I don't know. We've been looking at PMIs all week. Do they really matter? I make the case that they don't, but we're going to go ahead and we'll probably take a look at a few of them today. All right, everybody, remember, if you want to be a part of the Switch Markets community, you're in the right place. We're sort of melding the how to trade, the education from how to trade to the brokerage services of Switch Markets, and the idea here is to build one strong community. We're going to be putting more and more content on the Switch Markets YouTube channel. So if you haven't checked that one out, you're probably going to want to check that one out, the How to Trade YouTube channel. I think we may be posting there from time to time, but if you're watching there and you want fresh content, you want all the things tools-wise, like we've got a couple of tools videos that we're working on now, but we're also going to be building a ton of shorts. That's where our shorts have been going live lately, and also I believe we're going to have a webinar that's going to drop September 18th. I think you guys are going to be interested in that. It's how to use the algobuilder.com framework and get you up and running with AI in your trading. That's for sure. So there's a lot coming out right there. Jay King, do you have any videos on trading news basics, specifically on Forex? Yes, we have them in the Academy. I did. Actually, they're probably on the Forex Signals TV channel as well. And it's called Trading News Events. I go through all the different news, news outlets and where you can get your news, and also how to read the news. It's always on relative analysis. So yeah, there are some videos out there. Check out Forex Signals TV. Go there, and it was an older video, so it's on there, or it's in the How to Trade trading room underneath our Academy. We got a ton of content in there, so definitely check it out. All right, guys, Tuesday through Thursday. Today's Thursday. Remember, we're aggressive. We're especially aggressive this time of year. I want everybody thinking big. Now's the time to have the big thoughts. Now, that doesn't mean go crazy with your leverage. Don't go crazy with your leverage, but definitely, there's an old saying called setting the apple. If you're going to set the apple, maybe now is the time of year to be looking to do just that. This week, if you got off to a sluggish start or a slow start, just take it easy. Next week, we go hard. But this week, pretty good week to be going hard too. Focus on your execution, cash in on your opportunities. If your plan says trade it, and build the account. Tuesday, Wednesday, Thursday, psychology. Right here, we're going to start off with a trade update. I was asked to draw up something on U.S. oil yesterday, and I went ahead and pulled up an old one of my old favorite charts here, the weekly chart for the U.S. oil contract. So you can see we're still targeting that 65 level as being robust topside resistance, and there's really a lot of reasons to believe that that's going to be the case. Right here, you can see our weekly. We've got a nice spike high, nice spike low. There's your pullback, 64.91. Very nice, very nice. Why do I like it so much? Because 65 is right there. Okay, we've also got our 13-period EMA, which is right there at 65.15. So we've got a lot of stuff going on right there between 65 and 65 and a quarter. I like that. So the big question that everybody's going to ask, and I was asked this yesterday in a private message, was, okay, Shane, well, you loved 65, but that's not the top of the market. Why are we going to trade that again? Why would you want to take that short, even though we traded all the way up to that 50% level, which was 66? A couple of things I want to cover here. There was really a great comment in the live chat in our How to Trade room from an old trader, Wizard Alvin from New Zealand. He knows the markets. He's been in them forever. He knows what he's talking about. He says, I'm having trouble putting my finger on why we had the big oil rally on Tuesday. And the answer was very, very simple. It was the beginning of the fall season. He says, Shane, why would it rally bullish? Because it didn't really matter what happened price-wise. We had a big spike of participation back in that market. So we came out of the Labor Day weekend. Labor Day itself was very slow. Like I said, we put the hat on. We were having fun. We weren't talking about really getting involved with any meaning. But Tuesday was completely different. And if you want to take a look at this daily on the U.S. oil chart, you can see right there, what do you have? Bang, bang, bang. So your 2nd of September, your 3rd of September. Today's the 4th. Remember, that 2nd of September, that on your pricing chart probably includes Monday. If, in fact, your CFDs were open overseas or your futures markets, I thought it was futures may have been an early halt. To be honest, I didn't even look at it. It was either an early halt or a no trade. Typically, days like bank holidays are early halts for futures, and what happens to your charts is those all get compressed into one day. So what do you have? Yesterday's the 3rd. That's Wednesday. Tuesday was the 2nd. The 2nd is why you got the big rally, and the technicals didn't quite mean as much as they typically would. Now, do I believe in 65? Yes. And there's a couple of reasons why I believe in 65 as being probably robust resistance and more than likely the intermediate term top of this market. Shane, you're throwing out 66. I said, yeah, I just told you why. It's more of an accounting error than anything. You've got the big rush of participation after the market closure. Market goes crazy. Okay, you get bids, asks, whatever, runs price way up. That's fine. It's artificial. You look at that daily chart. There's no question it's artificial. So we've got two things really working towards the bearish side of our market right here. Number one is false seasonality. We're looking for an area to sell and sort of hold and maybe wait for this market to go down and check out 60 or maybe even 55. But there's another thing that's sort of developing here, and we really need to take a look at this if we're going to talk crude oil here. And what this is right here is our weekly petroleum report. Now, this is the EIA.gov, the Petroleum Supply Weekly. What you're going to want to do is just go ahead and run a Google for EIA's weekly supply report. It'll bring you to this web page. This is sort of one of the front of the EIA web pages. And you just go right there to Weekly Petroleum Status Report Highlights, and you click on that PDF, and it opens it up. And this is just a brief. This is, instead of digging into the charts and all the nuance, listen, we're not energy experts. You know, I don't work for Halliburton or Hess anymore. All right, we're not executives at Shell Oil. We don't need to know every little thing that comes out in that brief. What we need to know as active traders is this. You go right down to the 3rd paragraph. You say U.S. commercial crude oil inventories increased by 2.4 million barrels. Okay, at 420.7, U.S. crude oil inventories are about 4% below the 5-year average for this time of year. Now, you're still running behind the average, but that's a lot better than the 6% from a few weeks back. So the situation is improving. Next week may be a completely different story. I look for this right here. I look for supplies to begin building as we go into the fall months. And once we get that, it should be a bearish market driver here for your U.S. oil contract. So we're looking at that closely. Now, Shane, why did it drop today? And I'd say, well, it dropped today because we had the Labor Day holiday on Monday. When that happens, the oil inventories report comes out a day removed. So instead of Wednesday at 10:30 a.m. Eastern, I believe it was today. Well, no, it did come out today, but I believe they bumped that a half hour due to your EIA natural gas reports come out today as well. So a lot going on there. Absolutely a lot going on there. The crude oil markets have been crazy. I love selling 65. So if you want to check out that trade idea, it's in the How to Trade trading room. You just click follow and it gets beamed out to your email address. But I love that 64.91. I believe we're selling 89s. I like that area right up in there is a pretty good area for topside resistance. We're only about $1 away from that. We could easily get that tomorrow in NFP, maybe even during the overnight. I love it. If we get a chance to sell 65s, we're going to go ahead and sell 65s. All right, Australian dollar, U.S. dollar. I did want to cover this one right away very early in the stream because I know a lot of you are trading it right now. It seems like everyone wants to trade the Aussie. And I go, okay, that's great. And the reason why they want to trade that Australian dollar is because of what's going on in gold. Now, I got this question on a private chat the other day. It was Shane, why do you say gold would drive the Australian dollar? And the idea is very simple. Australian economy, Australia itself, tremendous amount of mining activity. Now, when you have a big industry, say in a country like Australia, which is an absolutely enormous place, you have a lot of mining, that's great. But what's that mining going to do? It's going to represent a large portion of your economic output. It's going to be a big part of the economy. And what happens is when that industry looks good, whether it's mining gold, for instance, or whether it's drilling, cultivating oil in Canada, that's going to impact the domestic currency. So it stands to reason that maybe the more the gold's worth, probably the more that the Australian dollar is worth. So the idea there is it's going to be positively correlated. Now, do we see the same type of bullish breakouts that we do in the Aussie as we are in gold right now? No, we're not, but it is a vital underpinning. Now, there's really three things that the Australian dollar can show a positive correlation to, at least in the mining sector. You'll be looking at gold, iron ore, and copper. Those three right there are going to give you a pretty good idea of what exactly that Australian mining industry consists of and how you can maybe trade it. So if you see a big day up in gold, and what do we have up for today in gold? Not really much, sort of flat, off a few bucks. That shouldn't surprise anybody. We'll look at gold and silver here in a minute. But you definitely want to be aware of what those metals are doing when you're trading the Aussie. As far as iron ore goes, I mean, we could probably pull an iron ore chart, but I believe that's going to be more of a spot market type of a thing. I would stick with probably copper and gold, and for me, I just streamline it right down to gold. Positive correlation. So the idea here is very simple. The idea is that you're going to have gold trading high, so you're going to have the Aussie sort of showing strength against the U.S. dollar. This is a nice monthly chart, though. Very simple. Spike high, spike low, and then you're looking for this pullback right to like 63.50-ish. That's a pretty good one, 63.59. Let's go ahead and take a look at this Aussie on a different type of strategy, though. I sort of get lost in the Fibonacci's. I want to thank everybody that sort of brought in the Fibonacci webinar from yesterday. Thanks for joining me. But as far as what can we really be expecting out of, say, a 920 EMA crossover? The 920, very simple, especially on weekly and daily time frames where you're taking swing trades, maybe long-term investiture. When the 9 crosses over the 20, when the red one crosses the blue one, you're looking to buy. When the red one crosses underneath the blue one, you're looking to sell. And you can see this weekly chart is pretty darn accurate. So we got a buy signal right there going back on the 5th of May. So theoretically, you could have been holding Aussies really all summer long, and you would have went from, 64.54 to 65.10. Is that really worth it? Not really, but we're still bullish. We're still relatively bullish here. So let's take this down to a daily chart and see what's happened as gold is broken out. Okay, this should come as no surprise. Should come as absolutely no surprise. Gold's broken out the past few days. Now it's trading firmly up above 35, 35.52. Yesterday was another big bullish day. So you sort of got your buy signal back on the 29th of August, and then you open September with a bid, and now prices have just sort of settled down. Exchange rates have settled down in this Aussie USD. I still like the long side. I think the 920 really shows you what we're expecting. We're expecting the Australian dollar to rally and sort of reflect stronger gold pricing and those US dollar rate cuts that we believe are coming anytime here, probably in September at the September meeting. If we get those types of things to play into the Australian dollar fundamentals, you're probably looking at the top side of this market. So if you're trading the Aussie, I would have a bullish bias. However, I would absolutely love to be able to get in there and be able to bid a macro level, which would just be, this would be it right here, right from this spike low, this panic low back in April where we saw the big tariff panic of 2025. Not really hearing much about tariffs anymore, are we? Bunch of court cases right now. Spike low, spike high, pullback, 63.54, 63.65. That's pretty good stuff. I like that one a lot. That's for sure. So that's what we're looking at for the Aussie. And we also had one more that I want to look at right now, and then let's go ahead and we're going to go ahead and take a look at some of the fundamentals. Now, this is the bearish trend line that we were talking about earlier that I said, listen, it's a bearish trend line. We were really looking at the bullish side of the market for the Euro USD. I gave you a bullish trend line. We're going to show that one in a minute, but this is a bearish one. Now, on your MT5 platform, relatively straightforward. You just go up there, click on your trend line, and you can draw it. But what you really are looking for here is just a couple of areas to hit. So right there, spike high right there. There's sort of a test, but you'll notice one thing about the test. You didn't close really above that high. You came back down, and then this area right in here, probably your second touch, and then this right here is what we really want to know. It gets fun right around the third touch, somewhere in that zone. Nice rally. There's the hit. Boom. Failure. Big sell-off. So now we're on the comeback trail, and we're looking to challenge this level again. So relatively straightforward. What we're thinking of doing here is if we get the break, Great Britain pound above this or on the Canadian dollar, the Great Britain pound CAD. If we do get the break and the close above the trend line, then we'll have a chance. We get that close right there, then we'll probably be playing that reversal to the top side. Is that the right thing to do? Boy, I think going into really bearish season for WTI crude oil, you're probably going to want to be looking towards the long side against the Canadian dollar. This is not a bad trend line. Daily chart sort of suggests with the fundamentals that we could build a case that the Great Britain pound is going to gain a little bit on the CAD, and then also when that WTI crude falls, that's going to hurt the CAD as well. That suggests bullish pricing. So there's your trend line. You've got really, that's where we began, right up there. So I don't know that you'd call that one, but that was sort of the top, the swing high. You could say that this challenge right here would be one, these two bars. Then we come down, that would be two, and now it's starting to get fun on three. Watching that trend line closely in this Great Britain pound Canadian dollar. Last one as far as trend lines go, Euro USD. This is sort of an interesting dynamic. You can see there was our daily trend line, and there was sort of the beginning of the trend, and then the one, and then the two, and then we had a lot of compression break. Then we pulled back. Now this area right up here, we're sort of viewing as topside resistance. So still, you're still in the trade. Realistically, you got to stop yourself out above that high. I don't believe that you hold it past that. Something like that. But now we're just chopping sideways, and this action right in here, right around 116.37-ish, still sort of in the money, but you're waiting for that big move. We haven't really got the big move. It was a pretty good, it wasn't a bad move really to kick off September, but are we looking for the dollar to gain on the euro? This is going to be a tough trade. So if you're drawing trend lines right here, and we're still working on that trend line, you may even want to just draw another trend line. And there's absolutely nothing wrong with doing things like this. You just be consistent and don't get lost. And you got to learn how to use your MT5 platform as well. But something like that, that's a horrible trend line. But this right here, you can't drag and drop these. But those two, let's go ahead and take a look at this on TradingView so I can get this done. TradingView, let's go right here to US oil. Let's go Euro USD. I want my daily, put up my daily. And I'm way behind on the live chat, guys. I'll catch up in just a second. So this is what we've been looking at. A bearish break. That's fine and dandy. Have we got it? Got it the other day. You could be doing something like this, though. Now, remember, trend lines are sort of fickle, and that a lot of people get really upset if they're not drawn perfectly. In my view, that's close enough. There's your first one, so you're sort of touching. Today's close is going to be big. Sort of have a little channel going there, too. Are we going to break lower, potentially? If you're bearish, you want to see a bearish close here beneath that line. Is that line as important as the other one? Hey, it's just a secondary entry is all it is. So definitely want to be looking at that. All right, guys, so I got way behind. Good to see everybody back. T. Marina, happy Thursday. Good to see you. Let me see. Tina Jing, you said Bach to chalk. Yeah, that's one of the news videos that we do have in the Academy. Feel free to check that one out. Let's see. Hey, yes, sir. Good to see you. Man, I got way behind. Flash Golden, good to see you, Flash. Let me see. Tina, hi, Shane. If interest rate cut, does the S&P 500 Bitcoin will go bullish, and as it will boost the economy, but the Forex will lose with money as the base will go bearish, right? Well, Tina, that's a great point. If you do see an interest rate cut, the idea is very simple. You're going to flood the economy with dollars, all right? You're going to put more dollars in there. That's designed to foster economic growth. It's going to help companies grow and expand. They're going to hire. They're going to be doing more things. They're financing. They're going to rework their financing and their capital structures. So the idea by pumping money into the system is to get economic growth and put people back to work. That's just the way that it is. So, it's a great question. So typically when you see a devalued dollar, You're going to see economic growth. The biggest problem that you have with that scenario is inflation. What happens to inflation when we start cutting rates? So to answer your question, Tina, S&P 500 and Bitcoin, definitely. I mean, if you pump a lot of money into the system, you're absolutely going to see bullish price action in stocks and in crypto. No question about it. Now, that's what we're looking at. The scenario is what we're looking at. We're already pricing almost 100% chance, I think it's 87 now, of getting that rate cut at the September meeting a little bit later this month. And that's great. That's fantastic. But what we really want to see is we want to see the future makeup of the FOMC. Okay, we want to see who's on that committee that's voting. We also want to see, is one rate cut going to be enough? Or is it going to be 2 rate cuts or 3 rate cuts? Or what's the forward guidance really looking like? And we're going to learn more about that tomorrow in NFP. So, yeah, absolutely. S&P 500 and Bitcoin will go bullish. Let me see. 44, another trend line. Absolutely. Another trend line under that one. Absolutely. Okay, let me see. Kuwari, what's likely to happen to the Euro CAD? Yeah, let's go ahead and look at the Euro CAD here. And Dream Partners, how you doing, Dream? Good to see you. Dave F19, I got behind. Lead, I got behind. Welcome, guys. I got a little bit behind on the live chats. Gordon Williams, hello, everyone. Let's go Cowboys. How about them Cowboys? I don't know. We'll see how they do this year. I'm not honestly. My wife's an Eagles fan, so I hope you don't unfollow and hey, just turn it off right now. But she's got Eagles gear everywhere. Her family's from outside of Souderton, which is just on the outskirts of Philly. But definitely, it's football season. So you guys pick your teams, sit back and enjoy American football season. It seems like it's always soccer season or European football season. All right, guys, let's go ahead and take a look at that Euro CAD. That's not a bad idea. Euro USD right there. Let's go Euro CAD. Are there any other trend lines we could really focus on? I'm not really focused on any other ones for right this minute. I do like that Great Britain pound CAD. I think that's interesting if we get that break up above that top side resistance. But right here, so what you got on the daily? We got a real slow market, so we're immediately going to back off to a weekly. But I will point out we broke above our 13-period EMA, which is sort of my preferred tool, and it's 160.83. So, you're right up around 160.95, 161 is a key level, no question about it. It's been traded a lot, but still it has some relevance. Let's go to a weekly. Okay, so if you're on a weekly, you're going to be going something like that spike low to a spike high. There's your pullback and your failure right at 38%. Is it worth buying right now? Boy, I would probably wait. 160.50 is a superior zone to bid. But, maybe if you got a big sell-off in here, somewhere down in there is absolutely great, 159.43. The only reason I would even mention that level, this one right down in here, is I've got my EMA right inside the golden zone. So the EMA is 159.68, 159.43. That's going to be a pretty good area maybe to target along. Now, do we get it? Probably not. We just basically built the case why the Canadian dollar is probably in trouble here as we roll deeper into the fall. Has to do with crude oil falling. But right this second, I probably would be on the cautious side of trading this pair. Now, I know these are weekly levels and monthly levels and all that. So let's take you right down to see if we can find an intraday scalp. Guys, after a while, looking at, you put your 10,000 hours in front of the screens and, there's a book called 10,000 Hours. I think it's something about experts, but it's by Malcolm Gladwell. Just Google Malcolm Gladwell 10,000 Hours. And what you'll see is in the book, he builds the case that you're going to need 10,000 hours to be an expert really in anything, to be a true expert. Now, a lot of folks believe that's too much. A lot of folks believe that's not enough, whatever you may say. But after you look at enough charts, you could legitimately look at a monthly chart and the price action and have a pretty good idea what's going on the 4-hour. You really would. You can tell by if you're pushing monthly highs or lows. You can tell if you're trading in the middle of the monthly range, if that price action's flat. All right, so we had a pretty good idea before even going to the 4-hour chart that the price action's flat. So what I'm interested in is this. I'm interested in what's going on a different type of strategy. So I already know exactly what we want to do. I know that if we sell off down to 160.50, it's probably at least a cautious bid. But what's going on right now on that 920? And that's not necessarily a bad idea to really reference multiple strategies just to see what's shaking. So right here on a monthly, you can see, okay, you got a bid way back there. I want to go to the daily. So let's take this down to a daily and see if we've got a recent bid. Do we? Nope. Right here. Back on the 6th of August, I got you into a pretty good trade, but now you're probably underwater here. Is it time to break out again? Let's go to a 4-hour. Okay, so now I have a trade. I don't really have a problem with the bullish bias on the Euro CAD. I wouldn't be taking a position forever and ever and ever. I just wouldn't. I think the Canadian dollar, not the best time of year to be. Well, I mean, how should I put this? Let's put this delicately, right? If you don't want to back the Canadian dollar going into the fall because crude oil more than likely is going to sell off, then you say, okay, that would put us on a bullish footing here for the EuroCAD. However, you've got the Eurozone, which seems intent on maybe cutting interest rates no matter what the inflation numbers say. So if they continue to cut, it really throws this into a real, I'd call it a quagmire. However, we did see higher interest rates coming out of the Eurozone, higher CPI earlier this week means inflation's up. So if inflation goes up in the Eurozone and oil prices go down, that does sort of spell a bullish move here in the EuroCAD. And we just pulled up the weeklies. You saw the levels that we're looking at. We're still in bullish territory. Do we want to take this long? It's not a bad long. There's your entry point. Now, do all those fundamentals dictate what happens in this 4-hour trade? No. Do they help you, though? Potentially. Spike low there. There's your stop loss down around 160.20. There's your long right around 160.96 or 161. What does your trade need to look like to be successful? That's just a basic one-to-one. Let's go ahead and pull up our tool, long position. Okay. So what does our target need to be? We know where our stop is. Okay, so there's your stop. What is that? At least a one-to-one. At least a one-to-one. So if that's your trade, you're looking for something right around that 161.72 level. Does that sort of coincide with what's happened in the market? And the answer is yes. It's actually a conservative profit target. If you were a smart money trader, and there's a lot of you in here that love smart money concepts, and that's great. You feel free to trade however you'd like to trade. You'd probably be shooting for that top of that liquidity sweep right there back on the 22nd of August. So it's not bad. Is this area right here something you'd have to be aware of? Yeah, you would. Still, though, you've got pretty good trade location. That could be a situation where what? You've just put it down for almost a 1.73 or almost a 1-to-2 risk versus reward. It's not bad. It's not a bad trade. Fundamentals have to help us for us to get there. We're probably going to be in that the better part of a week, potentially. But that's how I would be looking at the EuroCAD. Something like that. Let me see. Hurst, go Cowboys. Eli, go Eagles. We knew we'd get some heat. We knew we'd get some heat when we start talking football teams, that's for sure. Let me see. Okay, Eli, the Great Britain Pound Japanese yen looks good. Yeah, let's go ahead and take a look at that one here in a second. And then, yes, sir, the thoughts on the yen been holding along since Jackson Hole sell-off, getting some mixed views on direction. Could be good. Let's see. Rate cuts are, yeah, absolutely right, 44. Rate cuts are going to be bullish for commodities. In my view, the rate cuts are the only thing holding the U.S. oil market above $60. That's the only thing I see happening right now. The markets are used to the Russia-Ukraine situation. They have a pretty good idea of what's going to happen with rate cuts, but they believe that maybe there's some more coming. We don't know. And as you devalue those dollars, the value of commodities goes up. So it's a bullish market driver for gold. It's a bullish market driver for crude oil. It's just, I think it's the only thing keeping crude oil above 60 right now. Something to think about there. All right, let's go. Let's take a look at these yen. Hammy, good to see you, Hammy. Welcome. Bren98, can we see some Bitcoin? Absolutely. We'll take a look at some Bitcoin right now. Okay, so we've got Bitcoin and the Great Britain Pound Yen. Let's go ahead and look at the Great Britain Pound Yen first while we're thinking Forex. We'll go ahead and start off with our 920 EMA crossover, and then we'll rotate back to Bitcoin. Okay, right there was your bid. So theoretically, you're on that same bid train if you are playing the 4-hour chart. So right there, just remember, I mean, if you're trading these short-term charts, NFP will mess up some of these cross pairs that don't have the U.S. dollar involved. NFP tomorrow's big. We're going to preview that here in just a second, but that right there would be your bid. Let's go ahead and step back and see what we can do potentially with our Fibonacci's and just take a look at market state. Key levels 200, you can see we can't really get established and hold up there, at least in the short term. I would be watching that relatively closely. Big round number, key level. You're going to want to be aware of what happens there. So you're definitely going to be, that could be a big deal. Let's go ahead and get rid of all the drawings here and just analyze what's happening. You see sort of choppy, not real great. Let's go to the daily. Compression. Which way is the market going to break? Bullish or bearish? We don't know. Nobody knows which way a market's going to break, especially when you have a situation that involves the Japanese yen. I mean, there's a lot going on in Japan right now. There's been leadership turnovers. We know for a fact the BOJ wants to get back to a negative deposit rate as fast as they can. They don't want to be in positive territory anymore. They want it to be negative. That goes back to the dirty float narrative, to where you devalue the yen to try to boost the competitive nature of your exports. You want your exports hyper competitive, and that in turn makes those companies that are profiting from the hyper competitive exports profitable. You bring foreign direct investment in. Very similar. It's called Abenomics. The Japanese have been doing this for a long time. It sounds a lot like what Trump here wants to do here in the United States. It really does. So what you're going to see right here, nice, decent, bullish candle. I guess we're up about 0.25%. Let's go ahead and take a look at the weekly, see what we've got on the weekly. Absolute compression, very difficult. So the first thing we look at is this. You see sort of liquidity sweeps. That's what the smart money players would say. I just call it basically a triple top. I don't want to get too confused about what's happening. Take a look. Okay, so that's a top back on the 11th of August that week, 18th the next week, and we went right up there this week, right at 227. 200 is the key, guys. Probably a lot of shorts involved, real similar to 3,500. Of course, it's not an all-time high or anything, but what we're watching is we're waiting for that to break. And once 200 breaks, you get established up there, then we're just buying retracement levels and pullbacks. That's really all there is to it. We're not going to reinvent the wheel there on that pound yen. Definitely, I'm looking at the top side, but not until 200 breaks. 200 is the 5,000-pound elephant in the room. That's for sure. All right, let's see. Bryn 98. Can we see some Bitcoin? Absolutely. Anybody own any Bitcoin? 109.80. Yeah, we're sort of coming into the kill zone here, Bryn. This level right here, 105.38. I put that out. I believe the buy was 107.50. We'll review that tomorrow. I didn't want to get too caught up in the trade ideas for today, the past ones. We had a loser the other day. I'll recap that tomorrow for sure, though. But there's your low. So right there, your low is 107.270. So 107.5, you're pretty much in a pretty good position there. Now, 105.385 is absolutely huge. I mean, that is the macro level that I'm looking at. What is it? It's a monthly 38%. Still very bullish towards Bitcoin, but you can see there is a bit of a correction going. Now, this is vintage. This is how markets work, guys. This is how markets work. It happens every time. I mean, it really does. What do we have? What has happened here to Bitcoin? Nice big rally. Beautiful July. Everybody that owned the Bitcoin, I mean, they were out shopping for cars, buying, big old cigars and new cowboy hats and things. And then, okay, what do? We go up to 124.5, which is a test of that 125 level, and then we sell off big. We sell off big. That's sort of just saying, okay, that's going to be potentially the intermediate term top of our market, but it's not necessarily the top. Now, we were on record for a long time. Once we break above 100, we go to 125. I believe that. I believe that with everything I had, and I said, yeah, that's going to happen, and it pretty much did, 124.5. I'm going to go ahead and take that. What happens now? We know we're going to have interest rate cuts. We know we have a crypto-friendly administration in the White House that is invested in crypto themselves. What does that mean for prices? It means they're going to go up. Deregulation. Listen, there's a couple market drivers for crypto. Okay, deregulation is one of them, and fraud's another one, and public, basically institutional adoption. We're watching the government adopt cryptocurrencies. We're watching them deregulate the crypto atmosphere, and what we're seeing is bullish participation from the big dog, and that's Bitcoin. So right there, 105.385. I mean, that's a great level. If you wanted to be really picky, you'd be in probably 106, maybe 105.75. We'll recap this one tomorrow too, but that trade idea has been out for a few weeks now. But we were looking for like 107.50. 107.5, and 107.5. That was there. You got a nice bump off of that. So watch for the compression, but that 105.385 is big. I'm still bullish. As far as what's happened to, say, BTC on a 920, let's go ahead and take a look at that. Not much. We're working on maybe a sell setting up on the 4-hour. I wouldn't get too worried about that. Daily. So there was your sell on the daily back on the 18th of August. Pretty good stuff. So the 920 has you selling. I love the bullish bias. I'm still extremely happy, extremely pleased with that. But something like this, I mean, you could really see sort of what's happened there. That doesn't need to be on there. But this right here, sell, pullback, still bearish there on a 920 daily. But I'm bullish overall. So like if you were to go to a monthly, like we just had, you could see buy, and buy some more back in October 2023. Really hard to argue with that. But short term, we are seeing some selling. Be ready. I love 105.5 down there. That would be pretty good. Not bad. Not bad at all. So I hope that helps with Bryn. I think that's an interesting look at a market that's really moving. All right, let me see here. Tina, do you think the gold can pull back to the daily low after the news event to get in the market for a long trade? Yeah, that's a good question. We better go ahead and look at gold. I know that's going to be really a big deal moving into the NFP session. So this was relatively easy. You could see my little chicken scratches in my drawing. We sort of knew, we had a pretty good idea that this bullish pennant was going to break. Okay, there's a big run up, bang, 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 and then we broke. So at the top side of this market was about 35.78. So we went about $78 up above that 3,500 level, just on our initial washout that happened, just over the course of a few days. What do we think could happen now? I was a big proponent of any chance to buy 35 even. I would be in, no question about it. So take a look at the daily uptrend. Now this has sort of been created by that key number breaking. So if I was trading this, spike low, spike high, pull back to 34.92, pretty tough. What happened today? 35.11. Do we believe that that's ever going to go? 35 is going to get tested even. I don't think so. This was a pretty big test. This was a nice big sell-off earlier today, and now you're back on the bull. This market's extremely bullish. I would definitely have those levels in my head. 35.0250, 34.92. Those are big numbers going into NFP. Extremely bullish still. Definitely one of those things that I would want to make my mistakes to the long. I don't want to be short here. Today was a good day for the shorts. The shorts dug in and they said, okay, let's bet on a correction, and they bet on it. Why do you think you got some action right there? You washed out yesterday's low. Why is that important? Because it's an uptrend. Look at all the days where you have higher lows. Basically, you just washed out a bunch of retail stops, quick rebound. Now we're headed higher. I would sort of expect us to move in a more bullish fashion unless we get just a huge NFP number, something that suggests that we don't need a rate cut. I think more than likely you're going to see gold move higher, Bitcoin move higher, and we're seeing the evidence of it, at least in our charts. Bitcoin, a little bit bearish on the short-term charts, but let's take a look at gold on a 4-hour. Interesting. Nice big sell-off, and now the rally still above the moving average. I'm still pretty bullish for gold, that's for sure. So can it pull back to the daily low after the news event? I think that you want to be any reason to buy gold, but the NFP number is going to be huge. I don't know that I would be net long or short going into NFP tomorrow just because it shakes gold up to such a huge degree. But we could definitely be looking for our levels. I would love to see gold sort of close right in here. There's so much participation that on the NFP release, we could get a shot at 35s. I'm buying 35s all day long. 35.0250 is probably going to be a hot zone. I like that one a lot. Right above the 35. If I was going to try to pick a bottom of this thing for tomorrow's NFP, I'd say it's right in there somewhere. But if you want to be conservative, and maybe we get a close right down in here somewhere, 35.35, something like that, maybe 35.40. I'm down there at 38% at 34.92. Maybe just buying 34.97s, 95s. That's a strong trade down there. That's a really strong zone. The area between 35 and 34.92, very strong. Could we get that tomorrow? Yes, we could. Shane, that's a $50 move. I go, it doesn't really matter when there's that much participation in the market. If you get, everybody's going to be looking at gold tomorrow, and everybody's going to be trading NFP. So if this market runs, it could run $40 our way. No question about it. No question. So hope that helps, Tina. Eli, waiting for that 200 level. It's huge in that Great Britain pound Japanese yen. It's huge. That's all there is for the guppy. Now let me see. Bitcoin needs more liquidity from the bottoms, I think. Yeah, we're just in a holding pattern right now. I think that Bitcoin goes higher. I'm not sure how fast it takes 125,000 out though. Remember those quarter handles, guys. We get established above $125. We're going to 150. No question about it. Let me see. Hurst Horns. I've never traded Forex or gold before, only the indices like the MNQ, MES, and MNS. So you're trading the micro E-minis, micro E-mini futures. Yeah, I mean, it's not a bad thing to trade. So if you were trading like the US 100, you'd see this orb got absolutely smoked today. Let's go to the NASDAQ. So here's your E-mini NASDAQ, something like this. Remember, these are getting ready to roll over. These are September contracts. So if you were going to trade the MNQ, excuse me, this would be the micro E-minis. So we'll still look at SEPI, September, and you can see that these are, I believe, what are they, a quarter, a point, or something like that? So you could trade 4 or 5 contracts if you wanted. Let's see right there, 7:30 a.m. So this would be your orb. Very tight orb right there. Inside, bar, bang. Then you trade outside. That would have been your entry down there. You really don't get much out of it. And then you got stopped out right up in there. So that would have been a loser on the orb, no question about it. Let's go to a 30-minute, though. Okay, 30-minute. It's bigger, but you got a chance to win now. First 30-minute opening bell, ding, ding. The second 30 minutes, so that's the first hour of trade, and then you get that break. The 15-minute is a much smaller range, but when you get caught up in this stuff right here, sort of an inverted hammer and then a hammer, and then the market breaks. I mean, that's one of the great things about the 30s. It can keep you out of trouble. And one of the good things about trading a micro contract like this, Hurst, so your micro NQ, is you can take that leverage way down and be able to play something like the orb on a 30-minute and not get destroyed doing it. Instead of $6 a tick, you could take it down to be $1 a tick, something like that. So there's a lot of different options to control your risk with. We give you the strategy sort of out front saying, okay, here's how you can enter and exit the market, and all that's great. But what can we do with our risk? Different contract sizes, different position sizes. Where would your topside target be on a trade like this? The smart money concepts, to be real honest with you, I'm not I'm not a big fan. That's okay. It doesn't mean you can't use them. That order block right there, that could be a potential target. Why not? Why not? Something to think about there if you're trading U.S. equities futures. All right, I love how they aggregate the multiple entries. Yeah, I like to use the micros and build in and out of positions. I love how they aggregate the multiple entries. Yeah, I mean, what you do is you just basically are dollar cost averaging in. You're just scaling in, and there's really no worries with that. That can get very touchy, though, especially if you're doing it in a losing position or a position that's underwater. So let me see. Yeah, so Hurst. So I can essentially move my positions around or drag my entry level to level using micros. It's great and a very high win rate doing it. Can you do that with a Forex, or is each entry separate? Well, I mean, theoretically, it's all going to be the same. So like if I buy, the euro at par value, the euro USD at par value, and then I go in again at par value plus a quarter, that should average me in at par plus 13 or 12.5. That's where I should be in. The only difference that you're going to have really with your Forex is that you're going to have the spreads to contend with. And a lot of times those spreads, if they're big on the currency pairs, you're going to run into different aggregation troubles, meaning it's not going to be as efficient as it is in the futures markets. I hope that makes sense, because you're going to have a spread to contend with. So you're going to be averaging the bid-ask spreads, and it probably is going to be, it's probably not going to work in your favor. Things very rarely do. When it comes to that, when it comes to spreads and things like that. Yeah, I see what you're saying. Hurst. Yeah, not a bad idea. All right, let's see. We got a couple things to do on the fundamental front. Let's go ahead and call it a day. Week 36 today was the ADP employment change. Really not much here. Labor market growth slows dramatically in August with the U.S. adding just 54,000 jobs. The ADP is not a market driver. It's not a market driver, but this was the headline. U.S. private sector hiring rose less than expected in August and significantly cooled from the prior month, according to the ADP. Private payrolls increased by just 54,000, well short of the 75,000 estimate from the economist polled by the Dow Jones, and well down from the revised gain of 106. Thursday's release adds to an already concerning picture of the labor market. I'm not too worried about it. So maybe I'm just a fair weather guy, or maybe I'm just a happy guy. I'm not too concerned about it at all. I don't believe that the ADP employment change has much impact at all on the markets, and the reason why I say that is we got a little bit shaken up this morning. That was probably the reason for our orbs being a little fouled up. But take a look at what we're doing now. We're trending higher. We're trending higher. So you could say that ADP, the negative headline sort of suggests that, okay, it's going to be a negative market driver. Well, not really. It's going to say that, yeah, you probably need interest cuts, and it's going to send equities indices to the top side. It's not going to suggest necessarily that you're going into a recession. Right now, guys, it's all about monetary policy. That's what it's all about. And the more that we believe we're going to get quantitative easing, the higher these markets are going to go. No question about it. All right, so ADP, non-farm employment change, really not my thing. News of the day, you can see that is the lead, 54,000. Came in beneath 73 expected and 106 previous. Continuing jobless claims, not really a huge number. You can see came in at 1940K. I don't even worry about continuing jobless claims. You don't need to. Initial, 237,000 above the 230 expected and above the previous release. So that suggests that more people are going to the unemployment line and getting those benefits for the first time. So that's definitely one that will raise your eyebrows. That is a weekly number, but still, guy, I mean, we're talking about a country that's absolutely massive with a huge population, and you're only talking about 7,000. I just don't see it as being a thing. In any case, 4-week average, you can have that if you want. Now, what we've got here, really a number that people were interested in earlier today was the trade balance. And the only reason anybody's really interested in it is because Trump's made it a big deal. Trade balance came in at negative $78.30 billion. That was a little bit more than expected and much more than the previous release. So that there's all sorts of tariff things that are dictating the trade balance right now, dictating those levels. So I'm not really too concerned about what the trade balance says. We'll see where we're at next year. But just remember, the United States typically always runs a deficit. I would be absolutely shocked that even with the tariffs and all the new trade policies that trade balance ever goes positive for the United States. I just don't see it. I just don't see it. So something to think about there. If you get caught up in those things and you're a wannabe, or no, excuse me, not a wannabe, but if you would like to become an economist, well, you're going to have to learn about all that stuff. To me, they're just accounting tricks. News of the day, ISM non-manufacturing PMI came in at 52 over 50. ISM non-manufacturing prices, now that's the inflation indicator, came in a little bit less than expected as well. Those are academic numbers. Remember, the Institute of Supply Management, the ISM, that's a think tank. So if you're familiar with the military, the think tanks, the RAND Corporation would be a great example. I would call the ISM a similar type of organization that does things facing the U.S. economy and probably the global economy as well. The PMIs, these things are academic numbers. If you work at the ISM, don't hate me, but I just am not sure what these numbers mean. And I would say, well, you just need to boost your sophistication. I said, no, I don't think they mean anything with regards to the markets. I guess that's what I'm talking about. We could sit down and read what they are and figure them all out. It just isn't a market driver. The only thing you need to know about the ISM, the only thing you need to know about these secondary releases that occur during the U.S. session is, let's say you're trading on a 1-minute chart or maybe a 5-minute chart. You're going to get a spike of volatility on those short time frames. But if you're in the broader picture, the broader perspective, it's not going to shake your foundations. It's a bump in the road. So if you're a 30-second scalper, yeah, you probably should know when it drops, but you don't really need to know what it means or what it says. Just know that it's going to create a little bump in the road. I wouldn't worry about it, though. Unless we saw an ISM number come in at like 85 or come in at like 10, and then the ISM people are saying, whoa, we got a meteor coming towards the Earth or something. If it's a major surprise, then yeah, maybe everybody will panic. But those aren't surprises. Those mean less than nothing. Crude oil inventories, we already hit that up. You can see we came in with a bit of a supply build. All right, this is what's important for tomorrow. We'll be on 6:20 a.m. Eastern my time, 8:20 a.m. or 6:20 Mountain time, 8:20 a.m. Eastern. It's going to be an interesting type of a dynamic because the entire world's watching this U.S. NFP report. I believe that we're going to see. I think it's going to be a bad one. I really do. I just don't see I don't see the jobs recovering nearly as fast as we would be led to believe. There's a lot of layoffs right now, and that sort of came out in that JOLTS number yesterday. Corporate layoffs were up. Quits weren't up, which is just people quitting. Layoffs are up. Typically, when you get into a tighter job market, the quits are way down because nobody's quitting their job, but the layoffs are way up. We're starting to see the corporate layoffs head north. That's a challenge. Let me see. Sharif, good to see you, Sharif. Welcome. Here we go. Non-farm payroll, 75,000, up from 73,000. That type of estimate tells me that nobody knows what's going to happen. Well, it came in at 73 last time. We're just going to say 75. This is what's important. Unemployment rate, 4.3%. Will it creep higher from 4.2? Remember, 4.0 is the Fed's benchmark. That's what they see a 4% unemployment rate as being acceptable. So that, remember, 2% inflation is what they're looking for. 4% unemployment's doable, right? Those are the metrics. 4 and 2. What happens? What happens if that thing comes in at 4.5, 4.6? That's what we're waiting for, and we believe that it's possible just because of the impact of some of the policies that we've seen this year. We're starting to get into they've been in action for 90 days, 120 days. We're going to start to really see the impacts of the tariffs and the new trade policies from the Trump administration on employment. It's going to be interesting. We're also going to see the impact of higher interest rates. The United States has held rates higher for longer than everybody else. No question about it. Are we in for a big rate cut? Maybe a half-point rate cut. We'll recap all this tomorrow after NFP. No question about it. But it's always interesting to see. For me, the unemployment rate is more important than just the aggregate jobs creation. We're looking at the unemployment rate very closely. I think that's hugely important. Okay, here's historically where we've been since COVID. This is the COVID year, July of 2020. This goes back 5 years. I guess that would have been September, somewhere in there. In any case, you'll notice there's only been one time we've had a negative NFP where we've seen an actual contraction. So it's not common to see a contraction, but take a look at where we've been this year, this summer especially. Really 3 months of really poor, historically poor job growth. You throw these highs out because it's all the folks that weren't at work at COVID going back to work. Those counted as job creation. That was a fugazi. Those numbers, even these numbers in 2021 were pretty much fake, and we all knew it. It just showed, what job growth? No, it's just different sectors coming back online after the shutdown. That's really what it was. And then we got sort of into the real deal here in 2024 where the job creation was way down from where it had been, and now we see job creation essentially grind to a halt. That's what has everybody scared. That's why they want the interest rate cuts, and they want it bad. That's for sure. So it ought to be interesting. 3 red folders all around the market open. I think it's going to be fascinating what happens tomorrow. I'm looking for a big trend day, no question about it. Big picture. A couple of levels just to put in your head. I don't even have to pull the charts. For gold, 3,500. Have that in your head. Remember, long-term retracement level at 3,492. Those numbers should be written down, spot gold. The other big one is for silver, 40 even. That's the one you want, 40 even. Pretty good level. It's going to bring you two-way participation. Let's go ahead and pull the silver chart. I've forgotten. It's important that we look at it. Silver right here. Okay, fantastic stuff. Really an incredible breakout run, but this pullback today, almost 2%, 1.64%, a lot bigger than the gold pullback. Does that surprise anybody? It shouldn't. Remember, silver typically gets buried. When it sells off big. So right there, 40.17, that's a big deal if you're trading silver. But this level right down here, 39.37 with the 13-period EMA, the 13-day EMA down at 39.50. That is absolutely a fantastic zone. Probably one that will draw up potentially for a trade idea a little bit later today. I just want to see where the dust clears before we go into NFP. So it should be interesting. I think we've got an opportunity there potentially to trade some metals tomorrow. If you're trading silver futures, though, it probably should be micro silver futures because those margins are huge. But if you're trading it on a CFD, it might actually be a pretty good move. Does silver trade back beneath 40? I think it challenges it. I think it pulls back to 40. So we'll be watching that one closely. All right, guys. FYI, the new tool on TradingView shows interest rates all over the world. Really? Can't beat that. We've been honestly, Eli, we've been streaming so much. I think I could probably name them to you. What we know is the U.S. is lagging. I think that I don't know what to think. I really don't. FOMC under siege. Court battle with Lisa Cook and the mortgage fraud. We talked a lot about that last week. It's really difficult to try to even peg where the FOMC's head's at. We don't know. It's going to be a fascinating Fed release. No question about it. No question about it. All right, everybody, I'm going to go ahead and sign off here for today. I got to get cracking on tomorrow's stream. It's going to be a good one. I think we're going to do some high impact trading. I really am just falling for the 920 EMA. It's one of those that when we first made the video, I said, this is interesting. It's interesting. But you really see the potential of that thing. And so we're going to be looking at that probably on very short time frames. We're going to use some RSI confirmation. We may use the 9 EMA. I don't particularly care for the 9 EMA, even with RSI right after a big event. It seems like we invariably get chopped to death. So I want to make sure that we have a shot to maybe bank a few pips. We'll be looking at that. And then also the Fibonacci retracement levels. We'll have a set of those ready to rock and roll. No doubt about it. All right, everybody. Have a nice day. You guys have a fantastic day. Eli, coffee in the morning. Yeah. It's going to be about, I'll be up probably grinding the beans at 4:45, 4:30. Callie, you're absolutely welcome, Callie. Gordon, good luck with your Cowboys or your Eagles, whoever you guys are taking or whoever you're fans of. The NFL does open this week, so it ought to be a pretty interesting week. I think that, if you make a little bit of money on NFP, maybe you can put some bets out on Sunday. I don't know, though. That's up to you guys. All right, everybody, have a fantastic trading day. Get ready for NFP. We'll have a trade idea out probably right around the Asia Pacific Open, so you'll have it when you get up to trade your London session, and then we'll be back for NFP Live tomorrow, 10 minutes before the number drops. We'll give you the preview of what we're expecting. Any news at all, we'll be all over it, and then also the key markets and the key levels. That's really what we need to do. Alan, peace out. All right. I like it. Have a good one. You guys have a fantastic trading day. Remember to finish strong, trade the action well, and we'll talk soon. See ya.